Today is Monday, August 28th, and this is the ADM Investor Services Weekly Market Kickoff. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Steve Freed, Vice President of Grain Research. Alan, the U.S. dollar slid Friday after a speech from Federal Reserve Chair Yellen at the Fed's annual Jackson Hole conference when she offered few clues on the path for U.S. monetary policy. What is the outlook for the U.S. dollar now?
Well, it's still very negative. In fact, we, of course, did see some new lows for the move on Friday and also another new low today. So it appears that the Fed is going to be very slow in raising interest rates. They probably won't raise this year, but I think they can raise in the first quarter of next year. So with that in mind, while other central banks are likely to become less accommodative and the Fed likely to be slow to raise rates, it's a recipe for a lower dollar index.
Copper futures advanced to a 33-month high on Friday. What does this say about the state of the global economy?
Well, it appears that the economy is in good shape globally when the industrial metals are this strong. And it's not just the copper that is done so well. Other industrial metals such as zinc now at a 10-year high. So this implies that the global economy is probably performing better than most analysts are thinking. So we're anticipating good gains across the board in the economy here and overseas. And this is a trend that should last for quite some time.
What is the outlook for stock index futures in light of Friday's report that showed durable goods orders in July were weaker than expected?
Well, that's just one report. If we're right in our thinking that the global economy is going to do very well this year and well into next year and probably even beyond, stock index futures will probably continue their advance. Once the geopolitical issues settle down, I think that we'll probably see the low interest rate environment and a stronger global economy take over, taking stock index futures to further gains. In fact, I would not be surprised to see a new round of historical highs in all of the major indices before the end of this year.
Steve, Pro Farmer estimated last week a lower U.S. corn and bean crop yield than the USDA August estimate, yet prices are going lower. Why is this?
Well, historically, the Pro Farmer Group tends to come out with a lower yield than the USDA, both in August and the final. So I think it's difficult to drive around the country and go from field to field and come up, with not only a state average but a U.S. average. I don't expect the market to trade positively if the yield drops, unless the USDA drops it either in the September or October report.
What impact did Texas Hurricane Harvey have on grains and U.S. exports?
So far it has had no impact. I mean, it's a property, it's a human type impact. We haven't really seen crude oil production reduced, but the refineries are shut down, so it might have an impact maybe temporarily on gas prices, but it's not going to affect the New Orleans shipping, and probably isn't going to throw a lot of rain on the Delta corn and soybean crops. So right now the impact on the grains is minimal.
What is the normal season for corn, beans, and wheat prices?
Seasonality is in this type of year when we've had an okay crop. For the most part, demand is going up. You have a tendency to drift lower after the September crop report into the harvest and make some lows then. Then we tend to rally after the harvest lows into January once the farmers have stored the grain and once we start putting a weather premium on in South America. If the weather in South America is okay, then we tend to make February lows, and then we start building a premium into U.S. weather into next May and June.
And finally, soy oil futures rallied last week after the U.S. Commerce Department announced preliminary sanctions against Indonesia and Argentina. Where will soy oil prices go now?
Well, two things. I think most people believe fundamentally this will increase the demand for soybean oil. And unless the crush goes up, eventually soybean oil prices will rally above these 35 cents a pound area in the futures. Some people think it could go as high as 39 cents a pound once the sanctions are put on and once it affects the imports. But one of the problems is that when you look at a long-term chart, soybean oil futures almost follow exactly crude oil futures. And so if we're seeing some sell-off in the crude oil market and we have some type of weakness there, you're going to see the same traders trading soybean oil on the lower side. So I think initially it'll follow crude oil. Long term, it could help prices with the lower import demand.
Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.